Hello and welcome to the quarterly update for the high growth portfolio for the March quarter of 2019. I'm Evan Lucas, our Chief Market Strategist and Portfolio Manager, and this portfolio really does highlight at the moment the difference of what a quarter can make. Last quarter, you did see almost a perfect storm with regards to how economic conditions were filtering through into economic markets. You can see equities were under a heck of a lot of pressure as a lot of people were questioning the global growth story and the fact that financial conditions globally were tightening. That's a complete reversal in the first quarter, and I really want to highlight the US. US had its best start to the year since 1998, its best quarter since the third quarter of 2009, as you really saw the fact that the Fed stepped away from its tightening cycle really push up growth and risk on assets. Equity markets, not just in the US, were very, very positive. Look at Europe, despite the fact that you saw Germany actually have a technical recession in Q3 and possibly likely to do it in Q4 as well. And the Brexit issues, Europe actually performed reasonably well. And then Asia, have a look at the CSI 300, 28% in the last quarter. And the Asian exposure that we have in this part of the portfolio also very, very accreted. So VGS, very much the big mover in this part of the market and very much the big mover in this portfolio. It also filtered through into IOZ. The Australian assets also had a very, very good start to the year. And clearly the fact that the Banking Royal Commission ended, but also the fact that at the moment that cyclical growth is on the up. Commodities are clearly driving things forward, and that comes to the China story. And again, that all filtered into why the high growth portfolio returned you 10.34% after fees. The question now is what happens into the next part of the year, and the reason why Q1 was so positive is monetary stimulus ideas ramped up. Equities clearly are focusing on this as a cure to the possible malaise that's going on the overall market outlook of growth. If we do see stimulus coming, or at least rumoured to come at the back half of 2019, this portfolio will continue to benefit from that because growth assets and risk assets will clearly benefit from stimulus. Keep an eye on it. It's certainly something we expect to continue to perform well in Q2 and Q3, but there is a little bit of risk and we are aware of that. When you are looking at a portfolio like this, we have a 7-year time frame, and that's why right now, although it has moved up, you may see a little bit of volatility that may actually provide a bit of an entry point as a margin of error going in.